Hello and welcome to a brand new edition of Inside Out on the Road, a show where we'll focus on individual stocks with in-depth analysis, deep dive into the financials and tell you about the key risks and triggers going forward. So let's not waste any time and get to our first stock today. My colleague Nigel travelled to Bengaluru and gets us this very special deep dive on Hitachi Energy India.
Inside Out on the Road has travelled to Bangalore and we're here to visit the management of Hitachi Energy. But before we get chatting with them, well, let's tell you briefly about the company. They are focused on the transmission of power, particularly the high voltage segment. And as the name suggests, well, it will require technologically advanced equipment. Now, they deal from the automation to products to the substation integration as well. A few of their products as well as solutions come up for you on the screen. On the product side, well, they're focusing on power transformers, and for the railways in particular, they focus on the traction transformers. On the solution side, stability solutions is what they offer, namely FAC as well as STATCOM. Well, moving to their order book then. As of the last reported number, it was roughly around 7,000 crore rupees. Out of that, close to 25 to 30% comes in from exports. Further breaking down their order book, well, products constitute bulk of it, while services is a smaller quantum. But services has a good amount of potential from here on to move up. Moving to the segment-wise breakup or the sector-wise breakup, well, it's evenly distributed between utilities, that's private and public utilities, industries, which is mining, steel, cement, as well as oil and gas, and transport, which includes railways and metro. Moving to the financial performance, they've been clocking 1,000 to around 1,300 crores, but they have been impacted by the supply side, which namely is the semiconductor shortage issue. Now, negative operating leverage has played out. You have higher input costs as well, and that's why their margins have been fluctuating in the mid-single digits. But moving ahead, the street is positive on the prospects. Namely, for the industry, revival of private capex will help them. On the distribution side, you have Discom upgradation as well as modernization under the RDSS scheme. On the transmission side, there's big growth potential over here. And as India moves to around 500 gigawatt of renewable capacity, they have a big role to play. The Indian Railways, well, we're talking about electrification and a huge amount of metros being added. And finally, on the data center side, well, we're talking about doubling of capacity. All these will be tailwinds for the company. Well, before we wind this down, let's update you on the brief valuation picture that comes up for you on the screen. Not cheap, but prospects are interesting. So let's not waste any more time. Let's get straight to Mr. Venu, who's waiting by for us. Well, thanks so much for speaking to us here on CNBC-TV18, Mr. Venu. Well, you know, energy, the energy basket, electricity is likely to move up in terms of a contribution. Yeah. I think globally it's around 18-20% approximately.
Right.
The question is the last few years, you know, the capacity addition and traction on ground wasn't really there.
Yeah.
But are you seeing signs now that things are improving? And how do you see this contribution of electricity to the energy basket move up?
Thank you, Nigel. First of all, it's a great conversation I'm going to have with you. As you rightly said, you know, today the electricity as part of the energy basket is around 18 to 20%, depending upon which year you take as a base. But all the calculations, all the methods calculated by not only our company but also the international energy agencies are pointing towards that electricity is going to be doubled as part of the energy basket in next 20-30 years in that. Depending upon which country, which geography, some can go up faster than others, but that's what is the big picture in that. Why it's happening is because it's happening is energy transition is playing a major role, and also electrification fueled by the sustainability, etc., are driving this kind of more and more growth in the electricity in that. So coming back to your second point, as you rightly said, that there has been a bit of challenge, a lacuna during COVID times. So there is a dip in adding a more renewable energy as part of our thing in that. But I see a signs of pickup now. A lot of policy advocacy, the PLI incentives, all these things will adding that. And I'm sure that the target set by the government that by 2030, 50% of energy requirement metro renewable, I'm sure we're going to meet that requirement. But another important, Nigel, I think we also need to talk equally on the grid investments.
Yes.
While it's important that we need to set up the generations, but also equally important that we make the grids to be more sustainable, flexible to take care of these kind of energy transitions. requirements coming out of that.
Right, and Mr. Venu, your core focus is really on the high voltage power market.
Yeah.
So if you could give us a sense, what is your current market share that you have in this particular market?
Yeah.
Give us a rough number out there.
Right.
And also, are you seeing incremental investments coming there?
Yeah.
I ask you this because your borrowing limit as well, you have gone ahead and taken an enabling resolution, I think so.
Right,
From
right.
6,000 crores, you have pushed it up.
Right.
So you're expecting something big, I think.
Right. No, let me tell you, our Hitachi Energy's technology portfolio, be it the product, system, services, software, is the bridge between the generation and the consumption.
Right.
So we play a role in the generation, transmission, distribution, and also on the consumption side in that. So yes, our technology, our main focus is in transmitting the high voltage technology through our technologies such as HVDC, start counts, power quality, and grid integration, high voltage GIS, switchgear, and also the grid automation. All these technologies will enable making this kind of applications, etc. It's true that. And I've been also talking to you previously that India needs to, as part of the IEA report, India needs to add a power system of a size of equivalent to European Union to the existing one.
Right.
That needs a bigger, bulk transfer of energy and renewable from load center to the consumer center. So those needs to happen in that. So give one example of that HVDC technology. For example, the HVDC project, we used to have one project for every 4-5 years previously in India.
Right.
But today, the need of the hour is to have every project for one project for every year.
And in HVDC, you're the pioneers, right?
Yeah.
You're the leaders out there.
50% of energy HVDC links in India runs through Hitachi Energy Technologies in that.
Okay, so tell us the next couple of big tenders you're looking at, particularly in the HVDC market, because as you said, the frequency has increased.
Right. So we have actually one tender is come up for tariff-based competitive bidding, the HVDC Badla, and we also see other tenders have lined up. For example, HVDC Kauda, and also HVDC Leh Ladakh. So these are the immediate prospects coming up for this year to the next 2-3 years for bidding in that.
All right, and by when do you expect it, in this fiscal year itself?
One tender at least we expect to get closed this fiscal year, if not this fiscal year, at least beginning of the next fiscal year in that.
I mean, your current order book is currently around 7,000 crores. How much of that would be HVDC? Obviously, it's been very lumpy in nature. But as of now, how much is pending?
It's as I said, we have booked this particular project last year, the Mumbai HVDC in feed. This is also a very unique application, HVDC technology being used for this kind of application. Previously, HVDC technology only used for a long distance bulk power transfer, but this is like a city in feed, making the city more robust, more resilient, and more secure from the energy standpoint in that. So this is approximately around 2,000 plus crores ballpark in that. So that's also partly we are under execution mode, but that's also sitting in our order backlog.
And the tenders that you're expecting in HVDC, what could the quantum be?
They are quite a big tenders in nature, depending upon what kind of business model, etc. Anywhere between 5,000 plus upwards direction of that. That's kind of 5,000 to 10,000 crores.
Well, Mr. Venu, there's a tremendous potential in the transport and the infra space as well. So tell us the size of this opportunity. And I think as of now, you're in that vicinity of, say, around 15 to around 20% contribution coming in for railways. Where does this number head to?
Rail is part of the transportation segment. Rail, metro, and electrical vehicle charging is a key high growth segments, and we are seeing this growth is much higher than the market average in that. And just give a bit of perspective of that, every second Shatabdi you travel, it's powered through our traction transformer. Every third Rajdhani is powered through our traction transformer in that. 9 out of the 10 metro stations use Hitachi Energy's technologies in India. The railways have come up with a major tenders of 12,000 horsepower, 9,000 horsepower locos, and also 200 sets of Vande Bharat train sets. So there we see a lot of opportunity for us to position our technology there. The rail is in the range of 15 to 16% of our order portfolio. Okay.
Right.
And it is growing.
In terms of a market share in the railway segment?
Yeah, as I said, depending upon the different segment, different products. So we have a market share anywhere between 30% to 40% in higher.
And that, got it.
Yeah.
And data centers, that's another big focus area. And there's a lot of big capex that's been announced by big conglomerates.
Right.
That's a big opportunity as well for you all, right?
Absolutely. Data center is again the very high growth segment for us, and 15% of data center capex is for Hitachi Energy products and systems. Today we have every third data center is powered through our technology. We have a good focus and good package to give our both grid integration, also the dry type transformers, etc. in that.
Let's get to a couple of numbers. The financial performance needs to improve from year on.
Right.
One factor that's been hindering you all has been the chip shortage on the supply side.
Right.
So now the sense we're getting is demand is going to be strong.
Yeah.
But supply side, are things getting sorted out? Semiconductor issue, case in point.
So as far as the semiconductors, we have been very consistent saying that, this is a challenge. It's a global challenge, not only for us, and it's also for the whole industry as a whole. And it's definitely is improving, but we are not out of the woods yet.
By when do you get out of the woods?
We believe in our own estimate it's becoming improving. We will sequentially improve quarter on quarter. By end of this financial year is where we see it's normalizing the chips supply chains in that.
The other factor is, you all have been still, getting a little bit of a hit on the operating performance because of movement from ABB's IT infra to your own.
Yeah.
That transition that's taking place.
Right.
Could you tell us by when will this completely be out of the way?
We have been having a very clear plan to come out of our transactional service agreements with our previous owner.
Yes.
And then at the same time we started building up our own ERP systems globally, standalone globally in that. So that has actually taken, we are almost coming out of it, and I would say that in another couple of more quarters we will be out of that.
What is the current capacity utilization level that Hitachi Energy is functioning at on the whole?
If you really look at all our 19 manufacturing factories which are spread over 8 locations, so depending upon the factory, the utilization can go up and down, but ballpark we are right now in the range of 80-85% utilization is there.
You have been doing close to around 1,200 crores approximately.
Yeah.
Now going by that calculation, 80% capacity utilization level, you could still do on a quarterly basis, you could go to roughly around say 1,400 crores, just going by mathematically. With the current gross block, you could do revenues of close to around 6,000 crores.
So I don't want to put a number there, as you know, we don't give a forward looking, but what I can tell you is that...
But potential revenue...
What I can tell you is that in the last 3 years, our revenue CAGR growth is around 11%. The market is having a single-digit growth.
So you have outperformed.
We have outperformed the market in that. Okay, and today we have a much higher order backlog compared to last year or year before in that. Right? We are improving an order performance because we are a late cycle company, late cycle portfolio in that. So it needs, depending upon the portfolio, it needs anywhere between 12 months to 18 months for us to convert into the revenue in that.
Sure.
So 11% CAGR last 3 years. Now you can put a number, you can add your own things and say where we're going to land it.
Industry was growing at mid-single digits and you were growing at close to around 11% on an average.
Right. How we are growing is because we improved our exports, we are also improved our service, and then we are catering it to the other high growth segments.
Do you think industry can grow by close to around double digits? Is there a possibility?
Industry has to grow because when you see so much of infrastructure, we need to fulfill the expectations. So we need to have more cement plants, more steel plants, etc. Which is, in my view, it's very late. We have not seen that that way. But I think that has to come in a later point.
And you can outperform the industry by 500 to 600 basis points?
We are a very big player in the industry. Most of industrial customers, we work in a continuous basis.
Mr. Venu, you all have scaled up your exports proportion as a percentage of business. It used to be mid-teens. I think you've scaled it to the mid-20s. How do you see that number scale up? And you briefly mentioned even services. Services, I think, in the past year was around 400 crores. Where do you see that number headed?
Yeah. So we have a very clear strategy on the exports. When we started our company in 2020, our exports were in the range of 15% of our total orders. And we set up ourselves as a target that by 2023, and we need to be in the ballpark of 25%, and we already achieved that, and we would like to sustain that. And when it comes to the services, I know we have been present in India more than 6 decades. We have been making it more than 6 decades. We have a huge install base and that. So we want to leverage the install base, and we want to tap those install base to make the service offerings to our customers. Right now, service as part of our total orders is a high single digit, and we want to make it to a double digit, 15-16% in the next 3-4 years time in that.
From this 400 crores, do you see the business go to a couple of thousand crores, say in the next few years from now?
It has a high growth. I don't want to put a number over there, but definitely it is growing much higher than the market average in that.
You've also mentioned that by 2025 you get to around 10%.
Yeah.
Now, if I look at the last few quarters, it's been mid-single digits,
Right.
On an average.
Right.
But that goal of 10%, is it well and truly on?
We have a very good portfolio in our order backlog, and basis which we believe that if all these things are stabilizing headwinds, then we should be in a position to enter into double-digit EBITDA by end of FY25.
What is the capex you're incurring per year?
So in the last 3 years, we are on our annual run rate is in the range of 100 crores per year, and we also have the same plans for going forward in that to sustain that kind of capex run rate.
You have given us a fair bit about the business,
Yeah.
but there's so much of emphasis on renewables. You mentioned you have 19 manufacturing facilities, right?
Right.
How much of your facilities are dependent on renewables? What is the percentage?
So we wanted to be sure that we walk the talk. So we set ourselves a goal by 2030. We want to be carbon neutral at a global level, including India.
Right.
All our operations, as a first step, is that we have already enabled fossil-free electricity supply to all 19 manufacturing factories.
Well, so you're walking the talk, Mr. Venu. That's pretty good news on the renewable
Yeah.
side of things. Final question before we let you go. Is the worst over for Hitachi Energy? Will things look up from here?
We are improving sequentially on that. The supply chains are becoming better, and our offtake is becoming better, and we are improving on the revenue. All these things would help us to improve sequentially on that.
Well, it's been a pleasure talking to you, Mr. Venu. Thanks
you.
so much for speaking to us here
Thank you.
on Inside Out on CNBC-TV18.
Thank you.
All right, that was a deep dive into Hitachi Energy India, but time to slip into a short break. We'll come back with another interesting stock. Data Patterns is in the Swotlight on the other side. Welcome back to Inside Out. Well, the Swotlight today is going to be on Data Patterns, which is a vertically integrated defense and aerospace electronic solutions with end-to-end capabilities. The company's business is divided into 3 main segments: development, production, and services, wherein its capabilities span across missile systems, radars, electronic warfare, satellites, and communications. The development segment includes products that are under design, development, and trials in collaboration with platform and research organizations like DRDO. The products under this segment gradually mature and shift to final production orders for the company. The production segment caters to orders related to already developed defense platforms, and margins are usually high in this segment. The services segment primarily includes hardware design, product development, and software services. Company has been experiencing higher development orders. This is beneficial as a development order eventually gets converted to a production order, which has a higher margin, leading to overall increase in profitability. Their Q1 order book, which was at 967 crore rupees, has 33% coming from production segment, 62% from development, and the rest from services segment. And the clients included BEL, BrahMos, DRDO, HAL, Ministry of Defense, to name a few. The key products or services would include satellites, radars, which would be building blocks in signal processing, antenna, transmit or receive modules, etc. There would also be electronic surveillance and monitoring, which is required by Army, Air Force, and Navy. Lastly, communication systems, which would be required by all the 3 armed forces as well. Now, how does this convert into financials? The company has seen a strong growth in revenues over the past few years, revenues increasing from 130 crores to 450 crore rupees in FY23, which is a 36% CAGR, EBITDA rising from 26 crore to 172 crores in FY23, indicating a CAGR of 60%, and profits rising multifold, indicating a CAGR of 34% from FY19 to FY23. In terms of balance sheet as well, they are net cash. Their net debt to equity has reduced from 0.5 times in FY19 to nil, that is in FY23. Quickly glancing through their working capital as well, while receivable days have increased in FY23 to 308 days, creditor days have reduced to 35, inventory days have also increased to 155 versus 141, and cash conversion cycle That has seen a slight decline to 275 days. Company has given targets of what it wants to achieve in next 2 years. They are targeting large opportunities in radar, communication systems and satellite business, looking to be a major participant for contracts worth 2,000 to 3,000 crore rupees in the next 3 to 4 years. And they're also exploring opportunities in export markets with targets of 20% plus return on capital employed and return on equity for investors, sustainable margins at 40% and revenue CAGR of 25%. While things look good, there are a couple of risks to the business. Data patterns business is highly dependent on projects and programs undertaken by government and associated entities. Decline of the Indian defense or space budget could impact business. Additionally, majority of the contracts are fixed price contracts, and in the past the company has witnessed cost overruns in the case of some contracts. So this could be a risk. The stock trades at FY23 P of 69 times, so it is on the expensive side. But with that, we have run out of time on this episode of Inside Out. It's a goodbye from Nigel and I. But do write to us and tell us the companies you want us to discuss and you want to hear about, and we'll feature these on our show. Thanks a lot for watching.